Hey guys, and we're back at it. We are back at it. So this is video number 2 of the VA loan process. The first video we went over the with 6 benefits that I saw with the VA loan. I see a lot of transactions anytime I work with a veteran when I go with the VA loan route, and I want to point out just 6 things that I really love about that. Today we're going to talk about what would happen if you have a veteran that's looking to purchase a home. So if you're a veteran and you're looking to buy a house, and you yourself going to move into the home, or your family is going to move into this house, this is what today's video is going to be about. Now we can get into the meat and potatoes, as we like to say, of how that is done, but we'll be here all day long. So I promise I will get into certain areas of the VA loan and just spend a lot of time with that. But today we're going to go with just an overview of what would it look like as a primary home for a veteran. Okay, so we want to start there. So the first thing I want to talk about is what type of properties that will qualify for a VA loan. I get this question quite a bit, so I want to test that first. I'm kind of freestyling here a little bit, and I just thought about that. You know, a lot of people want to know what type of property that I can buy. So obviously, you could buy as a single-family residence, townhome, condo, manufactured home, multi-unit is like one of my favorites. You could buy a multi-unit with the VA loan. New construction is another big one. So if you're looking to purchase a home and build that house, either using a company to do that for you. So say there's a development that they're building brand new houses, you could use a VA loan. So everything will still apply with that, with new construction. So to answer those questions, that's what type of homes will qualify for a VA loan. And just remember, this must be your primary residence. So, okay, just want to add that in there. So, the other thing is I want to discuss is what will a veteran need? If you're a veteran looking to purchase a house, you're going to hear us talk about something called a certificate of eligibility. What we like to say, COE. We use a lot of abbreviations in the military. So a COE, certificate of eligibility. So it could be done one or two ways. You can request it yourself if you're familiar with ebenefits.va.gov. You as a veteran have access to doing the same thing. So you can log in and just see if you're qualified. So what the system is going to do is look at the amount of time that you served in the military, and it's going to just determine if you are eligible for the VA home loan. So, and if you don't want to request it yourself, then of course we can do that. I can request that for you. All I would need is your DD 214. Not all cases, but if you have one, make sure you send that to us and we can get that ordered for you. So your DD 214, if you're a veteran, you know what I'm speaking of, and make sure it is member copy 4. Member copy 4. You see that? Make sure you send that in to us and we'll get that ordered for you. It's a very short application. Normally comes back within seconds, and to let us know if you're eligible for the VA loan. Like I said, not going to get into a lot of details of the COE and what it is, but if there's another video out there for that, there's thousands of videos that break down how to get a COE, what it means, DD 214. Today, we're going to stick with the overview. So have your COE, we'll make sure that you're eligible, and we will take that from there. So the other thing would be is once you go through the pre-approval process, and how that works is once you turn in all your income documents, so your W-2s, your 1099s, your any pay stubs that you have, get those sent in, your bank statements, anything that shows your reserves and your assets. Once we review all of that, we're going to work on getting you a pre-approval letter. So the real estate agent is going to need that, and your agent is going to thank you for it for sure, because that's going to let them know what type of price point that you will qualify for. Now, I want to touch on that just for 1 second. So you may qualify for a $500,000, $600,000 home. Does not mean that you want that type of payment. So what we're going to do together is work on your affordability. Like I spoke about that in another video. Your eligibility versus affordability. I love the affordability. So you can afford, say you can afford a $6,000 payment. You may not want that type of payment. You may want to go with maybe a $3,000, $3,500, or $4,000 payment. So we're going to work that out. So once that's done, I'm going to issue out a pre-approval and send that to you and your real estate agent. And that's going to allow you to go out and start shopping. So the fun stuff, you get to go out and start looking for your house, and the real estate agent would know exactly what type of home you should be looking at. And also, if it's a single family, are we looking at a multi-unit? Are we looking at new construction? There's a lot of different scenarios with that, but we're going to ensure that you know exactly what type of home, or just if you're looking at single families, townhomes, condos, and multi-units, we got to make sure that the agent knows that. So when they put you in their search engine, they know exactly what type of home that you would need that would fit your requirements. But that would be done more on the real estate agent side. So make sure you share with them what type of properties that we're looking at. So the other thing would be is want to quickly touch is the funding fee. The funding fee will go back to when we spoke about how you're coming into this loan process with zero money down, because the VA is qualifying you and they're going to give you 25% of coverage that they have insured on that loan. So if anything was to happen to that particular loan, the VA is going to back us. They back us, right? They're going to back us on that particular type of loan, and you will be covered. All right. So that's the funding fee. And that's how all of us as veterans, I paid into the funding fee as well. We put this money together, and that's how we're able to keep the VA loan program going year by year. So that's what that is for. All right. So like I said, they're going to cover 25%. So since you're not putting down any type of down payment, we got to make sure that the VA loan is insured. But there are certain veterans that do not have to pay the funding fee. And I always want to point that out. If you are receiving any type of VA disability, let your loan officer know so we can see if you'll qualify. But one of the cool things about the COE on the certificate eligibility, 9 times out of 10, that's going to be identified. So if you're receiving $1,000, $2,000 a month, usually you'll see there's a spot that's reserved for that on that letter, and it will let the loan officer know that you are receiving VA disability. The great thing about the VA disability is the VA funding fee will be waived, and that can save you thousands of dollars to eliminate that funding fee, so it won't be attached to your loan. Not going to get too detailed with the funding fee. There's a lot of numbers with the funding fee. We'll save that for a different video. But if you know you're paying a funding fee, I will let you know what that is. And if you are receiving VA disability, I will make sure that we get that waived. So just bring that up. Like I said, we should see that on your certificate of eligibility. So we're going to skip along here. So after you receive your COE, you got yourself pre-approved, you out shopping with that real estate agent, and now you're ready to put in an offer. So there's a couple of different ways you can put in an offer. You want to speak with your real estate agent as it pertains to this, because there's a lot of different ways you can submit your offer. And I want to make sure this is done right, but I want you to know what your options are. So the first thing we're going to talk about is you can come in at the exact amount that they have listed on the market. So if you have a home that's listed for $500,000, you can put an offer in for that $500,000 if you wanted to. Okay, that's not going above, that's not going below. All right, so that is an option for you. 500,000 exactly, or the home is on the market for 600,000, you can put in an offer for that amount. There's another way of going in below market value. So if below the listing price. So if the house is on the market for 600,000, you can offer 550, 560, 570. You're probably not going to get the offer, but you want to speak to your real estate agent about that. Is it feasible for me to come in with a lower offer? In this market, me personally would not advise that, but make sure you speak to your real estate agent. You don't see that too often with someone coming in below asking. All right. The other way would be going above asking, but this works in 2 different ways. So make sure you focus on this. If you go above asking, say that they have it on the market for 500,000, but you need $10,000 of seller's assist. Okay, this is where the strategy comes in. You can actually offer 10,000 above asking, so therefore the seller will still give you the 10,000 that you need to cover your closing costs, and they still get the 500,000 that they requested when they listed that property. All right, say that again. So if the property is listed for 500,000, you could go above asking. Okay, go above asking. Say you need 10 grand, so request 510, and see if the seller will be willing to give you $10,000 of closing costs, seller's concessions, what they call that, seller concessions, and that will cover your closing costs. Possibly depends on the numbers, but you get the idea. Or if you really want to get the property and not ask for any assist, you could go above asking at that 510 and just say, look, instead of me trying to get this property at 500,000, you could come in at 510, and that's going to take you above and beyond the amount that they had listed. So another way of doing that, but make sure you speak to your real estate agent and ask them what they think is this a good offer by you doing something like that. Now, the only thing I want to add to that, which is very important, that house must appraise for that higher amount. And a lot of times that part is left out. So if they're asking for 500, but you said that, you know what, I want to write an offer for 510, and the appraisal comes in less than that, now you got to renegotiate that amount, because we got to ensure that the home is worth that amount. And that's really important, because the lender will only go off of what the appraised value would be. All right. And what that means is, so say the appraised value comes at 500,000, but your offer is at for 510. So either A, the seller's going to come back down to the 500,000 and still give you concessions, or they can elect to still request 510 from you because that's what you put on your contract. But you have to cover that difference. So the lender would not give you the loan amount based upon that 510. They would go off of the 500,000. So I just want to make sure we are clear on that. And like I said, you can request a seller's assist, either A, going above the amount that's requested, or coming in at asking and still asking for your seller's assist. And the first video, I pointed out that you can ask for up to 4% of seller concessions. So that is very important that we remember that part there. So I know there's a couple of different scenarios there, but that's the purpose of this video, is for you to understand the different strategies that we use when we're looking at these scenarios. So when you come to this type of a thought process, just make sure you reach out to me or your real estate agent. We'll go over the different options again. So you could go at asking, go above, request the seller's assist by you going above that amount and getting that money back, or coming in at asking and still asking for seller's assist. But be really careful with the seller's assist, because sometimes you may not get it because this market is extremely competitive. But if you need the money, make sure you ask for it, because if that's the only way you could get the money, then we have to go that route. All right. So those are the biggest things from the perspective of going in with the offer with the VA loan. All right. The other thing would be is what I like to do sometimes, if you really want to get aggressive with your contract, your offer that you put in, I can call behind the agent and speak to the listing agent and let them know what type of veteran that I have in front of me. And that allows me to just really sell my client to them. And a lot of times that will really help out the process. Okay, so we're willing to do everything that we can to help you out to get yourself under contract, because it can be tough. Not always, but it can be tough to get under contract these days with our current market. The other thing is with Affluent Mortgage, we offer something called a conditional approval. So when we start the pre-approval process, I can actually send your documents to an underwriter and have them to review your documents and approve you as is. So we can submit a pre-approval letter as well as a conditional approval with that letter to show the listing agent that you do qualify for the VA loan, and that will give them some type of relief as it pertains to you being qualified for that VA loan. So something else extra that we do here at Affluent Mortgage is want to make sure I add that in there. All right. Okay. The fourth thing I want to go over is the VA appraisal. So after you get under contract, the seller says that, look, I want to sell you the property, and we start the loan process. This is where the fun happens. But after the loan process starts, we order the VA appraisal. So today we're going to talk about the appraisal. One of the biggest misconceptions that I see a lot about the VA appraisal is that they're extremely tough, and they look at every single thing with the home, and they're being very nitpicky with that VA appraisal. If the house is in bad condition, a lot of times they're going to point it out no matter what. So it doesn't matter if it's an FHA loan or conventional loan. they're going to point these things out. But remember, the purpose of the VA appraisal is to protect the veteran and the lender, to ensure that the home that that veteran is buying is not in bad shape or in bad condition. So the listing agent, when they have that property, they just have to do the due diligence and ensure that the property is in good condition. So any type of loan that comes their way, it'll be approved. All right. So when that appraisal happens, if that appraisal ever comes in low, something unique that happens with the VA loan is something called Tidewater. Tidewater is giving us as a lender a heads up on an appraisal before they send the report back to us. So the agent, I mean, not the agent, but the appraiser will call us and say, look, Gary, I have a Tidewater in front of me. So the appraisal that you ordered is coming in low, and here's why. And that allows the real estate agent to support the different comps that they use with the appraisal. So if they may use comps that the appraiser may have not seen, or they may have a reason why they use certain comps that the appraiser may not agree with, but they have up to 2 days to get that over to the appraiser and allow the appraiser to review that and possibly change their mind on the value. FHA loans, we can't have that done. The conventional loans, USDA, it doesn't happen, but it does happen with the VA loan. So that's why I look at this as just a great benefit of going with the VA loan, because you do have the Tidewater that is there. I don't see a ton, but when I do get a Tidewater, we really get involved. So we help out with the agent to ensure that we're using the proper comps to support the value that is there. The other thing would be is with the new renegotiation with that. So if the appraisal comes in, say it comes in at $10,000 less, so the listing price is at $500,000, and the appraisal came in at $490,000. So the buyer's agent and the listing agent would get together with the seller and the buyer and come together with an agreement. So either they're going to come down to $490,000 with the contract, or they're going to request the buyer to come up with the additional funds, because the seller does not have to come down. So I just want to make sure we're clear on that. Sometimes people think that, oh, the seller has to come down. No, they don't, because if they had a cash offer, this conversation wouldn't even happen in the first place. Probably wouldn't been any type of appraisal ordered on this. So it's up to the seller. So if that was to happen, then yeah, you have to renegotiate and to ensure that we okay with the new price that that came up with the appraisal. So if they come in at $490,000, the new appraised value would be $490,000. So the last thing I want to discuss, which is my fifth item here, is what happens with the VA loan after closing. So you got your new house, you have your keys, you moved in. What type of options happens with that veteran? So you as a veteran, you can request to have a new loan done. Say the rates were to change years later, another year, 2 years, or whatever. Say right now you have a 6% interest rate, and the market changes and we have the lower rates. The VA loan offers what they call a VA IRRRL. We like to call it for short. So VA interest rate reduction loan. So that'll allow that veteran to reduce that interest rate without doing a full refinance. As you know, going through this process, it can be daunting. So this will allow you to go through the VA process without going through a full refinance. So we're going to ask for bare minimum documentation and get you into the new rate. Now, every lender have a different process of how they use the VA IRRRL. So depending on what lender we choose, we'll let you know what options you would have with that. So that's one thing I love about, I've done the VA IRRRL with my loan when the rates drop. We're able to get the loan done without getting an appraisal. So minimum documentation, no appraisal, allows that veteran to reduce their interest rate. The other thing is going back to how the VA protects their veterans. So say worst case scenario, I wouldn't want this for really anyone, but it's one of those things that happen. It happens all the time. So if you have a veteran that's run into hard times, either a job loss or something happened with the economy, like the pandemic happened a couple of years ago, and you find yourself getting behind on your payments, the VA is going to do everything they can to help you either modify that loan that you have, or save the house for you, just in general. So you can reach out to the VA and they will give you your different options. So that's one thing I really love about having a VA loan. We really want to ensure that the veteran understands that we are here for you and we're here to protect your investment and your assets. So if you run into a situation like that, you can reach out to the VA, and we do have representatives that will speak to you about your current situation to see what the ways that they can help assist so you do not lose your home. So I just want to make sure we're clear on that. You don't hear that a lot. And I know it's not the shiny object as it comes to a VA loan, but I want to make sure that you understand that there's a lot of options that's here. Okay, so we get your COE from the beginning, get your COE, find a property that works out for you. Also, we get you approved with your pre-approval, or we could do a conditional approval to just make sure that that loan is just more solid for you when you're trying to write an offer. You find a home, you write an offer on that property, you discuss the different strategies that we have with that. So you could go above asking, you could go below asking, you could come in at asking. There's a lot of different ways you can come in with a strategy with your VA loan. Then also after your contract, what happens with the VA appraisal? What different scenarios that we have with the VA appraisal? What's your house have been appraised? So what could happen? Hopefully, it just comes in and appraised, and a lot of times it may appraise more than what you wanted for the property in the first place. So it just depends. So we went through the different steps of things that can happen, which would be tide water if the VA came in at a low appraisal amount. And the last thing is what could happen beyond your close date. So you can do a VA rate reduction loan once the rates start to decrease in our market. You have that option. Like I said, it's not like a full up refinance. Minimum documentation, no appraisal, and that's the VA IRRRL. And if you find yourself in a situation where you cannot make your payments on your VA loan, there's options for you. The biggest thing is if you're working with me, reach out to me, ask me questions. That's the cool thing about having a company that will be there with you no matter what. Doesn't matter if you closed with me 2 or 3 years ago, the VA loan, and you want to find out what your options are, reach out to me and let's discuss those things. And don't forget, I didn't mention this through the whole video. Make sure you subscribe to my channel. Like I said, this is brand new for me, but I do have a podcast that's on audio. It's called the same thing, the Mortgage Motivation Podcast, and I have a lot of episodes on there. And I really break down all the different loans that are available. It's not like the VA loan is the only loan that we do, but we wanted to start off with the VA loan to give you more insight of what to expect. So this is video 2, guys. The third video we're going to go into if a veteran was to purchase a multi-unit, a duplex, how the VA loan will work out for them, and you become a landlord right from the beginning, which is, I think, is truly awesome. So we're going to talk about that. That is video number 3. If you have any questions about anything that I discussed, I know we went over a lot, and I think we were right at how many minutes? Almost 25 minutes. So we got some time in there. A lot to learn, could be, but I want to make sure we come up with a lot of different options, because not every single veteran that goes through the VA loan process is going to see the same exact thing. But as I stated before, we're going to break down the VA loan in a lot of different ways through other videos that we're going to put out here on this channel. Okay, so look forward to working with you. Look forward to seeing you on the third video. Like I said, make sure you subscribe and follow the channel. Hit the notifications button there so you'll be notified anytime I put out a new video. And thanks for all the support. I look forward to seeing you on video number 3.